right, folks, this is Vishal from Equity Guru. And is the banking crisis about to hit Canada? If you remember, just a few weeks ago, the news hitting the markets was the Silicon Valley Bank, and there's a few other regional banks in the U.S. Taking a hit. Of course, we saw fast action by the Fed and also U.S. regulators. And I just want to point this out. I mean, this is the Fed balance sheet. So in a tightening environment, we've seen the balance sheet sort of explode higher in the month of March because of this banking crisis issue here. And, there was this fears of the banking crisis going global because of the action we saw in Credit Suisse. Of course, that sort of got resolved with UBI, another bank in Switzerland, stepping in to buy up their assets. Now, markets are rising higher. A lot of people think that all this banking stuff is now done, but there's a few analysts out there saying, hey, maybe this isn't over just yet, right? Because you got to think about the environment that we are in or that banks are in. Interest rates are a bit higher, so they're not really getting that free money like they used to when rates were cheaper, and then buying long-term bonds, making the yield on that spread there. That's not happening anymore. We're hearing that deposits are also decreasing. And we're also hearing that, loans, right, which is lending and loans, which is the bank's main business, is also decreasing because of higher interest rates, right? So there's a lot of issues with some of these banks here, and there could be some problems with banks going forward. But going forward, I think the important thing here now is that a lot of traders, speculators are now taking positions against the Canadian banks. And the number that we have here, or the number one bank short in the world, right? So this is not just in North America or in Canada, but in the world, is Toronto Dominion Bank. It's the biggest short in the banking industry. It's not Switzerland or it's not Silicon Valley, but it's here in Canada. You can see here Toronto Dominion Bank is number one, BNP Paribas in France is number two, and then Bank of America is number three. And there's roughly now 3.7 billion US dollars on the line with the short against Canada's second largest lender. And the reason for the short, a lot of people are trying to figure out why this is happening. People believe it's because of TD's exposure to Canada's, slowing real estate market. So maybe this is now a bet against Canadian real estate, although I would believe, or I would think that you'd see more shorts on Canadian banks if they think that there's going to be an issue there with mortgages. And some people believe it's because of TD's stake or tie with the U.S. market, because it has a stake in Charles Schwab. And Charles Schwab recently lost 47 billion in U.S. dollars in market value over unrealized bond losses, and TD has roughly a 10% stake in Charles Schwab. So this could be, like a play on Charles Schwab, where people are now also betting against TD on this news. I like to look at the charts. Obviously, the first thing I think about is when I see this type of news, I think about, okay, maybe there's some big money that knows that something is happening or something could be on its way. And then maybe the charts can give an example of something coming, right? We've seen this with technical analysis where it's sometimes very spooky that, the charts can sort of forecast or foretell the news before it happens, because big money is making their bets. And of course, a lot of people, I'm not saying there's insider trading and stuff, but there is obviously imperfect information. If someone knows something's going to happen or coming down the road, you'll take positions. And this is why I like the charts, because the structures can maybe indicate if there's going to be a new trend reversal, which could maybe lead to the stock market or the stock or asset going down or higher, right? If the charts are showing something bullish. So I want to show you something I saw on TD. If we look at the daily chart, obviously there is a downtrend, right? There was this major sell-off that a lot of the banks were getting. TD bounced at the 77 or 76.50 zone, which, keep that in mind. It's going to be very, very important when I zoom out. And then with this recent news about TD being the biggest bank, you saw this large engulfing candle printed on April 4th. You saw this major gap down, which occurred as well. bit of a bounce, and it's still pretty bearish, right? I think as long as we remain below this $81 zone, the lower high and another downtrend could still trigger here on TD. But this is where things get really interesting. If I go and zoom out on the weekly chart, which is a very, very long-term chart, some of you with a technical eye can see what we have here. We seem to have a head and shoulder pattern on TD on the weekly chart with the neckline actually being retested here around that 77 to 76.50 zone, which we saw this week. And now, we're seeing a bit of a sell-off at time of recording. But this chart here is, that quintessential reversal pattern, right? A lot of traders, technical analysts look out for this chart, even on the short time frames. But when you see this on a larger time frame, right, on the weekly chart, the monthly chart, I think it's very, very important, right? So I saw this chart, I heard this news about the largest short, the largest banking short. And I'm like, okay, maybe something's wrong here, right, with TD. Maybe the technicals here are indicating, and again, money's maybe being entering positions a few weeks before this news came out, but maybe something's going to happen because this reversal pattern is going to trigger. So going forward, what actually triggers a head and shoulder pattern, right? So we can't just assume right now that this is going to trigger, that this is very bearish, because we have to wait for the neckline, which I've drawn out here, to actually break, which in my opinion also coincides with that close below this support zone around 76.50, which I highlighted on the daily chart, which saw a brief down. So in the coming weeks, if TD gets a close below this level, below this neckline, below 76.50, then this reversal pattern is triggered. I have some support here lower at around the 65 zone. And if that breaks, we have some major support at around $50. So very, very interesting that we have this news come out on TD. People still trying to figure out, is this a short or a bet against Canadian housing, or if this is, due to TD's deal with Charles Schwab. But all I can say is the chart here is indicating something bearish coming, or bearish momentum, but that trigger remains a close below that neckline. So we have a biggest short in the banking industry worldwide, right? And we have this major, quintessential, very popular reversal technical pattern. So when you sort of put those two things together, it is looking very bearish here for Toronto Dominion or TD Bank. So perhaps we are in for some sort of banking surprise or banking crisis, whatever you want to call it, here in Canada. But I think, as many people also believe too, that TD is one of those too big to fail banks, right? Sort of like Credit Suisse as well. And we'll see what happens. I'm not saying, to get your money out or anything, maybe from TD, but I do find it very, very interesting that there's big, big short. And as I said, being a technical trader, I saw this and it got me thinking that maybe big money knows that something is coming or something is happening, which is why positions are being taken. So let me know in the comments below what you guys think about TD Bank and, Canadian banks in general. It should be said that a lot of analysts actually sort of laughed or scoffed at this, because the Canadian banks are sort of known for being these, stalwarts, being very strong, because in the 2008 great financial crisis, the banks held up quite well, just like our real estate. So a lot of people see this as a very ridiculous bet, because Canadian banks are generally very strong and seen as safe, right? But of course, things could change because interest rates are higher now than they were before. And as we said, the lending is not as it used to be. I'm not even forgetting about those derivatives as well. So let me know in the comments below if you guys believe that we might see something here in the Canadian banks going forward. Tell me what you guys think about this head and shoulder pattern on the weekly chart for TD. Be sure to subscribe, be sure to follow, and check out all our other chart attack videos. And I'll catch you guys all in the next technical analysis video.